Hey everyone! Today we're going to talk about filing your personal tax return in Canada. I know, taxes can feel overwhelming, but don't worry. I'm here to break it down step by step. By the end of this video, you'll know what you need, how to file, and even how to maximize your refund. Ready? Let's get started. In Canada, your personal tax return is called the T1 General. It's the form you use to report all your income, claim deductions, and figure out how much tax you owe, or even better, how much money you'll get back as a refund. The Canada Revenue Agency, or CRA, uses this information to finalize your taxes for the year. The first thing you'll need to do is report your income. This includes employment income. That's your salary or wages. You will get a T4 slip from your employer that shows how much money you earned and how much taxes was already deducted. Self-employment income. If you freelance or run your own business, you'll need to calculate and report your earnings after expenses. Investment income, dividends, interest, or other returns on investments. For this, you'll usually get a T5 slip. Rental income. If you rent out a property, you'll report both the income and related expenses. Capital gains. If you sold stocks, real estate other than your principal residence, or other assets, you'll need to report any profits. Government benefits. Did you receive employment insurance or EI, COVID-19 benefits or pensions? These are taxable too. Remember, the CRA already gets copies of most slips, so don't forget to include all your forms. It's easy for them to spot if something's missing. Here's where you can save some money. Deductions. These lower the amount of income you're taxed on. Some common deductions in Canada are RSP contributions. The money you contribute to registered retirement saving plan reduces your taxable income. Union or professional dues. If you are part of a union or pay fees to a professional organization, those are deductible. Childcare expenses. You can claim expenses for daycare, babysitters, or after-school programs. Moving expenses. If you moved more than 40 kilometers for work or school, you might be able to deduct those costs. Home office expenses. If you worked from home, you can claim certain expenses. There's even a simplified flat rate method of $2 per day up to $500. Tax credits are even better than deductions because they directly reduce the tax you owe in Canada. Some common ones are basic personal amount. This is a credit everyone gets. For 2023, it's $15,000, meaning you don't pay taxes on your first $15,000 of income. Canada Workers Benefit, a refundable credit for low-income workers. Medical expenses. You can claim out-of-pocket costs for things like prescriptions, dental work, or therapy. Tuition credits. If you're a student, tuition fees can help reduce your taxes. Plus, you can transfer unused credits to a parent or spouse. Climate action incentive. If you live in a province where carbon pricing applies, you get this credit. It's paid quarterly. Check out the CRA's full list of credit. There might be something specific for your situation. Mark your calendar. Personal tax returns are due by April 30th every year. If you owe taxes and file late, the CRA charges a penalty of 5% of balance owing, plus 1% for each additional month you're late, up to 12 months. If you can't pay your taxes in full, file your returns on time anyway to avoid penalties. The CRA is usually open to payment arrangements. There are 3 ways to file your taxes in Canada. online through NETFILE. The CRA's electronic system lets you file using approved tax software like TurboTax, SimpleTax, or UFile. It's fast, secure, and you can get your refund in as little as 2 weeks. By mail. If you prefer paper forms, you can download and print them from CRA website. Just make sure your return is postmarked by April 30th. Hire a professional. If your taxes are complicated, say if you have a business or investments, it's worth working with an accountant or tax preparer. If you've paid more taxes than you owe, you'll get a refund. The CRA can deposit it directly into your bank account, or they'll mail you a check. It's better to sign up for a direct deposit. It's faster and more secure. Plus, if you are eligible for quarterly credits, like the GST or HST credit or climate action incentive, they'll be deposited there too. Ask for help if needed. The CRA's helpline or a professional can save you time and stress. If you've got questions, drop them in the comments. I'm happy to help. Thanks for watching and good luck with your taxes.